Good morning everyone, my name's Chris Evans and I'm Managing Director of Winsome Resources. And I'm very excited to be here today to talk to you about the potentially transformational option agreement we announced yesterday to acquire the Renard mine and associated infrastructure, which is located 60 kilometres south of our world-class Adena lithium asset in Quebec. We think that the potential opportunities offered by repurposing the Renard diamond mine into a lithium concentrator mine is absolutely game-changing for Winsome. So I look forward to talking through this story with you today, as well as the many other operational activities we have going on in Quebec. Now, a brief history of the Renard mine is that it started operation in 2016, operated for about 3 years, and then ran into financial difficulties in 2019 and went into administration. It was then bailed out by a consortium of companies, some of which were government-backed, and then recommenced operation in 2020. It then went into administration again in the last quarter of 2023 due to a severe drop in diamond prices. And at that point, the owners decided to undertake a sale and solicitation process. And this is where Winsome became involved. Knowing that the Renard mine was only 60 kilometres south of Adena, and very importantly that it was a 2.2 million tonne per annum throughput dense media separation operation, got us very interested in it. So we commenced negotiation with the vendors late last year. The more we began to look into this opportunity, the more we liked it for a variety of reasons. Firstly, as I mentioned, the fact that it's dense media separation, and that's one of the processing techniques that we will be using to concentrate our lithium from Adena, and that's based on the test work we've already put out. Secondly, the other processing steps that it currently contains, such as jaw crushing, cone crushing, and ore sorting, optical ore sorting, are exactly the technologies that we're also considering. So that made it very attractive, with the likelihood of us being able to repurpose it in position for a relatively low capital cost. Then the surrounding infrastructure is also very impressive. There is a 300-person accommodation camp. There is a road leading to the Renard mine that connects it to the surrounding road infrastructure in Quebec, and also the railhead at Chibougamau, approximately 400 kilometres to the south. There is also water treatment and storage facilities, tailings storage facilities, and a 16 megawatt LNG gas power station included in the facilities at Renard. And this struck us that if we're able to repurpose and reuse all of these in position, it'll potentially offer a huge saving in capital cost and give us a very credible and reduced risk pathway to production. The other main reason that we really like this project is the fact that the existing infrastructure is in place, and this, if we can repurpose that infrastructure and not have to rebuild it elsewhere in the James Bay region, means a significantly lower environmental impact of the Adena project. We see the 60 kilometre distance between Renard and Adena as capable of having a road being built, and in fact we've already started investigations and applied for funding for this to occur. That will be a haul road if we take up this opportunity, and that's not a long distance by mine standards to haul or to have it processed at the Adena project, given the potential massive capital cost savings that we will enjoy. If at the end of the call option period we decide to take up the call option and acquire the Renard mine, then the terms that we've negotiated are, at the time we will pay $15 million Canadian in cash or shares. 12 months after that, $22 million, and then 12 months further on, a final $15 million. Now, all of those payments can be in either cash or shares at our election. And so what that means is if we don't want, and we decide to take up the call option agreement, then we don't necessarily have to raise money because we can pay in Winsome shares. So that, we think, is a very good outcome for us. It means we can acquire the Renard mine, if we choose to do so, at a fraction of the money that's been spent on it. And also we don't have to raise money to do that, we can pay in Winsome shares. So that removes the spectre of a on-market capital raising for the foreseeable future for Winsome if we don't choose to do so, and we can still acquire this fantastic asset. So we see a huge amount of potential and savings if we acquire the Renard project. But there's still a lot of work to do to determine exactly what these savings are, exactly what the benefits are from a social, environmental and capital standpoint. And we see this happening over the next 6 to 11 months. And this is why the deal that we've negotiated so far with Stornoway, who are the owners of the Renard mine, is that we have an exclusive option for that period to decide whether we wish to acquire this mine. So the first stage of the option period, which is 6 months from now until the end of September 2024, will involve us doing a series of studies, both brownfield, which is repurposing the Renard mine to process the Adena lithium, and greenfield, which is building an entire new project at Adena. We will compare those two, and that should enable us to make a decision as to whether we wish to acquire the Renard operation in order to repurpose it to process our Adena lithium. If we can't make the decision in that time, or we choose to continue the option period, we can do that for another 3 months until the end of the year by paying a further sum of money. And then again at the end of the year, we can extend it till the end of February 2025 with a further $2 million if we choose to do so. So during that option period, Stornoway, the owners of the Renard mine, will be handling all of the care and maintenance. And I must say, having been there recently, the care and maintenance is top class. Everything is being maintained in perfect working order so that the mine and the processing facilities can be started up again very rapidly. They'll be looking after that for the option period. If we decide to take up the option and acquire the mine, at that point, Winsome will take over the care and maintenance. In addition to the now very busy study schedule we have over the option period to determine whether we take up the option to acquire the Renard mine, we also have all of our other activities going on in Quebec. We have 5 drill rigs on site as of today, continuing to drill away. And these are doing 2 things. One is exploring further areas at Adena and also concentrating on resource development drilling at Adena to grow the resource that we currently have in place. We've previously talked about the resource upgrade, which is coming in the first half of this year. That's still on track to come out in the next 1 to 2 months. And we expect that to be a good upgrade, bringing a good chunk of the resource into the indicated category to support the studies that we're doing later in the year that I just described. There's also been quite a bit of activity and general interest in Winsome in Canada. I just spent about 6 weeks over in Canada, seeing the teams on the ground. Very pleasing to see the activity around our office in Val-d'Or and of course at our site with all the drilling that's going on. But the strategic interest in Winsome is still very high. At the PDAC conference in Toronto in early March, we were swamped by inquiries from strategic players, many of whom are Japanese or Korean companies who already have battery interests in Quebec and who wish to create this battery materials ecosystem within the province that the government's really been pushing for and has been supporting them to do so over the last few years. And so the meetings we had with those companies at the PDAC conference has precipitated a upcoming trip to Japan and Korea. So myself and some of the other senior members of the company will be travelling to Japan and Korea to meet these companies and talk about potential collaborations in order to develop that battery materials ecosystem in Quebec. So we find that very exciting. And then looking forward a couple of months, in addition to the resource upgrade, we also have our summer exploration campaigns coming up. The snow's now starting to melt in Quebec, and that leads to the field season. So of course we've got Canset and our Tilly project, which both will benefit from a great deal of on-the-ground exploration this summer. We are doing geochemical soil analysis, we're doing some modelling on the ground and general field work at both of those sites in order to develop further drill targets that we can explore later in the year or early next year. So again, we've got that pipeline of projects that I referred to in the past. There's a lot coming up. We think that this exclusive call option to potentially acquire the Renard project could be transformative for our company. It offers us a reduced risk and credible pathway to production from our Adena project, and it really sets us aside from many of our peers. So I look forward to keeping you all updated. As in the past, I'll now cut over to live questions. Hopefully that goes smoothly. If there's a slight transition while we switch to live, please bear with us. I look forward to receiving your questions now. Thank you. The first question is from Vladimir, who asks, will the flotation circuit be located at Adena or at Renard? At this point, with the test work we've done, we're unsure whether there's going to be a flotation circuit. We got great recoveries from recent heavy liquid separation or lab version of DMS test work. We're hoping that our lithium can be concentrated just with DMS and hence the attractiveness of the Renard mine. But we've got test work ongoing for the next 6 months or so during this option period to work the flow sheet out. Mark has asked, how much 6% spodumene tonnage would the Renard facilities be potentially capable of producing? That depends on a number of factors. It depends on the recovery and, of course, the throughput. With a 2.2 million tonne per annum throughput and a recovery of around 80%, now that's a great recovery, of course. Not many mines achieve that so far, but that should be somewhere around 250 to 300,000 tonnes per annum of a 6% spod con. Of course, these days, 5.5 seems to be the standard, so that can affect things as well. But we'd expect probably somewhere between 200,000 and 300,000 tonnes of spodumene concentrate if we're able to repurpose the Renard mine. And Mark's also asked, what's the distance from Adena to Renard? The distance is 60 kilometres as the crow flies. We've mapped out a likely road route which avoids rivers and other environmental impacts, and it looks like it's about 80 kilometres by the time the road's designed. Greg's asked how far we are through due diligence. We've done a reasonable amount of due diligence over the last few months since the sale and solicitation process commenced. Enough due diligence that we think it's worthwhile entering into this call option agreement, and it looks like the mine is capable of being repurposed to process lithium. But the studies we're doing over the next 6 months to 12 months will really help us decide. As I said a moment ago, we'll essentially be doing 2 scoping / PEA studies, one on repurposing the Renard mine to process our lithium from Adena, and the other one on a greenfield project from Adena with a brand new project there. And we'll compare the 2 of those in order to make a decision on whether we take up the call option agreement. Hasmi's asked, are there any other permits required? A re-permitting process will be needed. At the moment, of course, the Renard mine is fully permitted, but that's for processing diamonds, and the kimberlite is what goes into the processed storage facility. Now, we'll be putting pegmatite in there ultimately if we decide to take up this option. So there's geochemical work that's needed in order to repurpose the licensing. But I think the main point here is the facilities are there, and many of the permits are in place that we would ultimately need, such as for the airport, the power plant, and other facilities that will be able to directly transfer over. Jose's asked, there are batteries being developed without lithium. How is this going to affect Winsome? There are always new technologies, and I think there are, for the moment, with electric vehicles being the primary use of lithium, there are no credible alternates that exclude lithium. So we see lithium being in demand for the next number of decades. So I don't think that'll affect Winsome or the multi-decade mine that we're planning on building in Quebec. And we certainly don't see that from the strategic interest I referred to. All the large strategic players are planning on 10 to 20 year mine lives in order to guarantee that supply of lithium for their EV supply chains that they're putting in place. Owen's asked who will own the rights over the unmined diamond resources. We're still yet to confirm that. Much of the diamonds, in the early days of the mine, they were accessed by open pit, which are now no longer used. And we see those potentially being repurposed as tailing storage if we take up this option. The underground mine's now down to about 800 metres. If we stop care and maintenance on that at some point, then that will flood, and that may sterilise some of the diamond assets, but there are others in the area. We have no interest in mining diamonds, and our sole purpose would be to repurpose this facility to process lithium. Peter's asked how large an operation could be supported if we make the acquisition. Well, at the moment it's 2.2 million tonne per annum throughput, and that's around the throughput level that we would have considered as a stage one. As you may be aware, the majority of new projects these days are counting on sort of stages or trains almost. Each one of those trains is designed generally to feed 1 or 2 trains of a conversion facility, producing anywhere between 15 to 20,000 tonnes of lithium hydroxide per annum. So perhaps the question here is, could we expand the facilities in the future at the Renard mine? The answer to that is yes, there's space to do that. But at the moment we're looking, the studies we're doing would be based on roughly that 2 million tonne per annum throughput as a base case, because that would be the lowest capital cost and the lowest risk to get into production to start with. Brian's asked what sort of potential accrued losses are there in the Renard entity. There certainly are accrued losses. We don't know whether we would be entitled to benefit from those if we take up the option agreement, and that's one of the things that we're going to be investigating during this study phase over the next 6 to 11 months. There's a question about the funding and timeframes for the haul road. Sagen company, who is a 100% owned Cree company, has applied for critical minerals infrastructure funding for the road, and that's stage 1 funding. Now, stage 1 is designed to get the road into a shovel-ready or construction-ready position. We should find out in the coming months whether that funding application is successful, and we were named as industry partners for Sagen on that application, which means we'll work in collaboration to get that road shovel-ready. The overall permitting times are fairly well documented in the environmental permitting regulations in Quebec, and we see that the permitting times for the road are roughly in line with what we'd expect to get the mine at Adena permitted to start production. So they sort of run parallel with one another. There's some comments. Vladimir has asked how much shorter the permitting timeframe will be due to this transaction. Again, that's something that we're going to be determining in the studies. I think at this point we can definitely say that the permitting will be de-risked, and in fact the entire project will be de-risked if we work out we can repurpose and we take up this option. And the de-risking comes from the fact that we don't have to permit things like an airport and a power plant and the other infrastructure that's already in place. While we are working on the permitting for the infrastructure and the pit and the waste dump, for example, that would still go at Adena, we can also be working on the repurposing of the plant at Renard, acknowledging, of course, that there's no assumption along the way that Adena will be approved. So The other de-risking point I think is very important. Instead of having to spend whatever the capital cost of a brand new project would be, and that could be $500 to $700 million, depending on what we install, and having a look at projects nearby, we'll be spending only a fraction of that. So the risk of actually getting that money and the risk of cost blowouts is also heavily reduced. And all of that could play to our advantage in getting this project into production in a timely manner. Owen's asked about the claim of $3 million per kilometre of road made on the recent popular mining podcast. I also saw that the day before yesterday mentioned. I think they were referring to the Northwest Territories when they quoted that figure, and they also said that it can only be used a couple of months of the year. Well, if you look at the road that was built to Renard to the south in 2016, and you look at other recent roads that have been built in the province, we think about $1 million per kilometre is fair for an all-weather haul road. And all the roads in the region at the moment are all-weather. I mean, they have to be maintained during winter, but I've driven on them in both summer and winter. So if those roads are built properly, and we think $1 million per kilometre is a reasonable estimate, not 3, and that may be Northwest Territories pricing. Ian's asked, do any land parcels come with the acquisition, have lithium bearing material more local to the mine? We haven't had a look at that yet, but it's a very good point, and we intend to have a look around, investigate the historical exploration data that's available around Renard during this option period, and it may well lead to further lithium discoveries. I know there's lithium properties nearby, and perhaps this will lead to the ability to use Renard to process smaller deposits in the region. We like the idea of this acting as a hub. Whether that's realistic or not, we're not sure yet. But again, part of this study period over the next 6 to 11 months will determine whether there are smaller deposits in the area that can also utilise Renard to process their lithium. Robert has asked about, can I speak about the investment in power metals? So our investment in power metals, we recognised the opportunity about 18 months ago now, when Unmined held at the time about 5% of them. But more importantly, they held all the offtake rights for lithium, cesium and tantalum at the Case Lake project, which is in Eastern Ontario. Unmined was ordered to divest their interest, so we jumped in for that 5% and the offtake rights. And then during a capital raise about a year ago, we then increased our stake to 19.6%. Recently, Power Metals has started drilling again at Case Lake, and they've come up with what looks like some encouraging results. There's already 13,000 metres of drilling there. And when I think of Adena, 27,000 metres contributed to our maiden resource of 59 million tonnes. So the 13,000 metres that's already been done, plus the 3,000 to 5,000 metres that Power Metals is doing at the moment, if they continue to have success with their drilling, should be enough to form an idea about a resource. We like having an interest for what hasn't cost us much money in another province. And also the cesium is very attractive for Power Metals. There's extremely high grades of pollucite, which is the mineral that hosts cesium, and that's in high demand at the moment. In fact, us and Power Metals are both getting inquiries about cesium from various parties. So we like having that on the side as another interest to diversify our portfolio somewhat, and it doesn't, at the same time, it doesn't distract us from our main game of developing the Adena project. Dan's asked if me or any of the Winsome team have had any experience repurposing mine facilities to process spodumene. The answer to that is no. I don't think anyone has yet repurposed facilities. However, that's the beauty of dense media separation. It's a relatively simple gravity sort of washing process that doesn't involve chemicals. And it's really about the comminution, the crushing, getting the size right, and getting the gravity cut points right in the DMS. The process currently at Renard is remarkably similar to what we would install if we were designing a DMS plant sort of off the shelf. So repurposing is not particularly difficult, we don't think. There's a question about, will we help fund the road construction works, or will this be funded by the government? Hopefully I partially answered that question before. There's been an application for the Critical Minerals Infrastructure Fund, initially for stage 1 to get the road shovel ready, and then if that's successful, you're then eligible for stage 2, which covers part of the construction cost. And with the Critical Minerals Infrastructure Fund, if that's First Nations led, which it is at the moment, up to 75% of the cost can be covered. There are also other provincial and federal funds available for that road construction, general infrastructure funds, which we think we can tap into. And the construction of that road really is needed for us, whether we go for the greenfield or the brownfield option. Going south and connecting to the 167 route that runs into Renard is our shortest route to market. So one way or another, we will supplement or fully fund that road. But as I said, funding applications are already underway, and we think there are other avenues as well to get government assistance, both at the provincial and federal level. Richard's asked, he understands that the Canadian government is a shareholder in Renard. Will this continue, and if so, what level? It's public knowledge at the moment that Investment Quebec owns 35% of Stornoway Company, which owns the Renard mine. CDPQ, which is the largest pension fund in Quebec, owns about 15%. And so if we decide to take up the option and if we pay in shares, then roughly the distribution will be as I just described. So those two organisations, which are government related, could potentially become shareholders of Winsome. For the moment, during the option period, yes, they're still the shareholders, and we look forward to maintaining close relationships with them. I met with both of those organisations a little over a week ago when I was in Quebec, and they appear supportive of this transaction. George has asked, are we looking to partner with any neighbours near Adena? We have already got an MOU in place with Loyal Lithium, and that's, so Loyal Lithium, their Trieste project is located about 12 kilometres to our east of Adena, but it also is immediately adjacent to our Tilly project, where we discovered some lithium late last summer with trenching. Now, the MOU is in place to facilitate development of infrastructure, sharing knowledge in the region, and other complementary activities. I think we're talking to a number of other nearby properties to try and get that same sort of MOU or cooperation agreement in place, and that'll facilitate all of our activities in the area. It depends, I suppose, what sort of success these companies have, how they intend to pursue their development pathway, but it makes complete sense for some general consolidation in the area as the years go by, and depending on what development pathways each company wishes to take. Paul's asked, are there any real world examples of diamond mines being successfully converted? No, there aren't yet. As I said, DMS plants are fairly similar the world over, and they can, based on our due diligence, we believe they can be relatively easily repurposed. Gary's asked if I intend on moving to Canada. That would seem like a bit of a copycat move at the moment, but I will be spending a lot more time there this year. I've already been over there for maybe 8 weeks, and I'll be returning there in a couple of weeks and spending a good few months. It goes without saying that that's where all our action is. We only have a couple of employees here in Australia, and we've got 30 employees and something like 60 odd contractors over in Canada. With the studies that are going on in the next 6 months, I'll be spending a lot more time there. But we're ASX listed, and I do also need to think about investors, many of whom are in Australia, to make sure they're taken care of and briefed as well. Matt's asked how are the offtake conversations going. I mentioned in my presentation earlier on that myself and our Chief Development Officer, Simon Ikepeta, are going to Korea and Japan very shortly. And that's as a result of some interesting meetings we've had over the last few months. I've been, I think, telling this audience that we've had a lot of strategic interest since probably mid last year, when it became apparent we had a sizable resource that was being developed. And we've largely been putting those strategic discussions off until we could publish our resource, and then most recently until we could have a more credible pathway to production, which I think we potentially now have with this option agreement. So the conversations I had in Canada recently with potential offtake and strategic partners were successful, and that's led to the trip in the coming week. One of our aims, our main strategic aims, is to make sure our product is converted in Quebec. So I don't think it's going to be as simple as us just signing an offtake agreement and giving our product to someone. Keeping the value in Quebec is very important for the Quebec economy, for social license, and to build that battery ecosystem that's rapidly developing, particularly around Bécancour to the south of us. So we see any strategic partnerships over the coming 12 months as focusing on that, making sure our product's converted in Quebec, and ideally that lithium hydroxide, if it's hydroxide that's produced, then goes to an end user that's going to feed it into the battery ecosystem that's being developed, either in Quebec or in North America in general. Dan's asked about details regarding any talks between Winsome and the Quebec Government before we committed to this option agreement. As I said, I met with Investment Quebec and CDPQ and other arms of the government. They were well aware that this was happening given their interest, and we look forward to working with them over this option period. I think our developing relationship with the Quebec Government that already existed hopefully is being elevated with this potential acquisition. So they're definitely conversations and a relationship that's being built. Excuse me while I read a few questions. There's a bit of time lag, so some of them I think I've already answered. Hasmi's asked, he understands more studies are needed, but do I have any rough numbers in mind in terms of how much cost savings are expected from the acquisition versus greenfield? If that's a capital cost saving, I think they could be quite considerable. If we look at recent capital cost estimates from, say, the James Bay project and from the Moblan DFS that was put out a couple of months ago, the CapEx estimates are anywhere between 750 million and $1 billion for those projects. If we assume ours was going to be the same for a greenfield project, and yet the majority of infrastructure in place and it's only a small repurposing that's needed, then I think the capital cost savings will stretch into the hundreds of millions of dollars. And as Hasby points out, that'll come out in the studies in the coming months. But I think they're going to be very significant. Andrew's asked, can we expect news on assays from this year's drilling program? Well, we've put a couple of those out already. We've put the majority of, in fact, I believe we've put virtually all of the drilling results that were in the lab when we put our last resource, when we put the maiden resource update out in December. They're being collated now into the next resource update, which will come in the next 1 to 2 months. That'll have about 20,000 that was in the lab, plus call it another 10,000 from this year. Probably another 30,000 metres will be added to bring a good in excess of 50% into indicated, increase the tonnes somewhat, and ideally improve upon that grade from the last, the maiden resource. Ramona's asked that we reference Sagen Port. Does that indicate interest in selling spodumene to Europe? There has been interest from European players, excuse me, but I think we reference the port only to show that there's, of course, most studies reference a free on board price for the spodumene concentrate, which involves transporting it to the nearest port. The two obvious places for us would be the port or Bécancour, given that we want to convert our product in Quebec. Bécancour makes sense at the moment, but remembering also that at Saguenay, the port, there's also aluminium refining facilities that have got a lot of power and they've already got that industrial base. So Saguenay's been mooted as another or a second Bécancour in Quebec. It was just a handy reference for a port when we quoted that. Paul's asked, how does the gas-fired power plant compare to hydro grid power in terms of cost? Gas-powered is definitely more expensive than grid power, but for us it's there at the moment. And there's a waiting list to get grid power, hydro power. We'd ultimately like to think that if we take up the option at Renard, that would be supplied with hydropower to lower the cost. But for the moment, again, it lowers the risk of permitting if we don't need to apply for hydropower in the short term. I think quite a few of these questions I may have already answered. There's another one about the Critical Mineral Infrastructure Fund, which I've already talked about. Stephen's asked, I think Adena will be bigger than 100 million tonnes in 2024. That's certainly what we're aiming for. As I said, there's going to be an upgrade in the coming month or two. That will mainly be focusing on bringing material into the indicated category for studies, but it will certainly grow the resource. And we've got a reasonable amount of drilling to do for the rest of the year to use up our flow-through funding. So certainly the aim is to get towards 100 million tonnes, and to me that feels like a good number to support any studies going forward. Ladies and gents, I think that just about wraps up our time. I appreciate all the questions today, appreciate the number of you who have jumped on this podcast, and I look forward to doing more in the future. Thank you very much.